U.S. inflation continues to back off. It's January 27th. We've just seen the PCE inflation report showing year on year at 5% when it had been 5.5%. However, in the core inflation, the month to month picked up from 0.2% to 0.3%. So a little conflict there. But what matters most to the market, I think, is the fact that it looks like inflation's coming down. The PCE report that's important to the Federal Reserve supports what we saw in the CPI report a couple of weeks ago. So here's the PCE month to month, and we can see it's just leveled off. But notice it's back to the normal behavior going back several years. The economy's trying to get back to normal. We're finally working away from that whole virus pandemic, lockdown, recession, money printing. Suddenly a booming economy, booming stock market went too far, created inflation. It's just one thing after another. The pendulum just keeps swinging back and forth wildly. But now we're seeing evidence the pendulum is slowing down. We're getting back to more something normal. All right, as we move over to here, we find the year-on-year inflation moving lower. We can find that we have that once-a-decade recession, and then we get a rebound, and then we have economic growth for several years, and we get a little better inflation. Then we hammer the inflation for another recession. It's called a juggler business cycle. It relates to a once-a-decade sell signal for us in the stock market, the most important sell signal during a decade all the way to during a day, okay? And then, of course, we move it up, and now it's moving down, and it's just going to get back to normal for the next few to several years. We're going to be okay. This supports our model stance of what's going to occur in the next for 2023, 2024, that fits inside our scenario or model script for what's going to occur for the economy and stock market this decade. And it also fits what we see in the next few months here for the stock market. Looking good, look like the model's on track, look like the business cycle is working, and we like this specific inflation report. But 2 weeks from now, we're going to get the CPI report for January inflation. And at the start of February, we're going to get PMIs, manufacturing and services, to give us a clue where GDP and the economy is going. And we just recently got a GDP update. For those who are not subscribers or followers, go to criticalpointpod.com. I have an explanation of myself, my modeling, how we're explaining the other 50% that fundamental and macroeconomic analysis will not explain for the economy and the stock market. And there's links there to become a subscriber or a follower at our podcast site, Critical Point. And so take a look at that, follow through. You want to be on board here for this decade for what we see for a beautiful business cycle pattern and how the economy grows and then falls apart, how the stock market is bullish and then has a bear market, okay? And we were correct on our forecast for bullish 2020 to 2021 into 2022. We were correct for the bear market of 2022 and a pullback in economic indicators. And now it's looking like we're going to be correct for our forecast of 2023 to 2024. I'm Rich Pawson for Critical Point. It's 9:16 a.m. Eastern Time, January 27th. Past results are not necessarily indicative of future results. Thank you.